Hey guys, how's it going? It's Andy from Go Investing. Happy Monday and Happy New Year's. So today we're going to be wrapping up my stock portfolio videos for 2020. 2020 has been a very good year when it comes to the overall stock market for myself. And in the past week, I've made maybe a dumb decision that has kind of hurt my gains for the overall year. But the plan for today's video is I'm going to talk about how my portfolio did in 2020 overall, explain the risky position that I opened last week and how it hurt my gains going into 2021. And then I'm going to be talking about 3 stocks that I'm eyeing to buy going into January of 2021. If you've been around this channel for a bit, I do have a lot of my portfolio currently sitting in cash. And because of that, I'm looking for great opportunities to take advantage of maybe some discounts that we see early on in this year. And so I'm just kind of waiting on the sidelines. So before we get started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. So when I first started this channel, it was with the intentions of only talking about gains and losses based on a percentage basis. When I started learning about investing in the stock market, I would go on YouTube and I'd see these people talking about, oh, I'm making $1,000 a day day trading. That's great, but it really isn't fair to compare dollar amounts between different people. That's the reason why on this channel, normally I only talk about my gains and losses on a percentage basis, because I could be up, I'll just spoil it. For this year, I was up 60% on the year. That's great, but if you look at it as a dollar amount, it's going to be a lot smaller than some of these guys that maybe are investing with, $1 million and are only making, 10% during the course of the year. So I think talking about percentages is something that I really believe is an important part about talking about investing, because you can try to mimic percentages, but if you're trying to hit a dollar amount, it's really dependent on how much money you have to start investing with in the first place. So in 2020, I just wanted, towards the end of the year, my goal was to hit 60% profit. And I was so close to that for the longest time. I think at the end of November, I was sitting around there. And then in the last week of the year, I decided to take a pretty risky position. And as a result, my final number for my portfolio in 2020 was 59.4% profit. So this is still very solid. I'm very happy with it. I just wanted that even number of 60, and I had it up until like the last couple of days of December. So here's what my portfolio looked like at the start of December. And then here's what it looks like as of right now. The big differences that you can see from this is that I did have a wheel strategy position open with Zynga at the beginning of December. Zynga increased in price. I was selling a covered call because I was using the wheel strategy. That got taken from me. And then I've been buying shares of General Electric anytime the stock really dips. It's not a huge position, but I'm just slowly adding to it. And I'm going to be talking about my plans with General Electric a little further on in this video. And then there's the stupid position that I opened up on GameStop last week. I made a video talking about GameStop last week, and if you missed that, I'll link that above right now. But the whole idea was that I was talking about the potential of a short squeeze coming. And since we're getting towards the end of the year, I kind of wanted to take a riskier position. So I decided to take an options position on GameStop. One of the main reasons behind that is because I was very proud of myself in 2020 where I didn't do any plays or trades that I really regretted. I've had this problem in 2018 and 2019 where I do really well for a couple months, and then I make one really stupid trade and it gets rid of pretty much all of my profits from that time period. And in 2020, I was very conservative when it comes to my overall investing strategy, and I was very happy with that. And since my birthday is officially a week from now, and I'm not going to be able to do something stupid like go to Vegas and blow a bunch of money, so the way that I kind of justified it in my mind is that I wanted to take a riskier option position that had a lot of upside, but it didn't have 100% loss potential. That's the reason why I decided not to buy an option, because when you buy an option, you have infinite amount of upside, but you also have the potential of losing all of your money. So with GameStop, I decided to do a wheel strategy to take advantage of the very high premiums. And so I did that, and I got assigned 100 shares at the $21 strike price. And I'll put up the current price of GameStop right now, and you can see that it has been falling the past couple days. But with the put that I sold and then the call that I sold after I got assigned to the shares, my average price is now sitting around $18. This is not the smartest position I've ever taken, but I wanted to take more of a riskier options trade going into 2021 to see if I could squeak out some profit on a stock that I think will likely have a short squeeze in the upcoming weeks. But I do want to hop onto the charts to talk about what I saw there that justified taking this position more than just, oh, the stock's been going up aggressively, because this was a video that I did talking about Wall Street bets and how there's so much hype and speculation behind these stocks. And if it was just a speculation, this would be a really stupid position. And it is not the smartest position in my opinion, but the things that I saw on the charts made me feel somewhat safe where I was comfortable losing X amount of dollars because I was expecting, maybe the lowest end that it's going to reach in the upcoming weeks is going to be the $16 mark. So let's hop on over the charts and I'll talk about the technical analysis that I did over there to justify taking this options position. Okay, so here we are looking at GameStop, ticker symbol GME. And so as you can see from the charts, I had the privilege of opening my position right at the top. So if we go into the shorter time frame, I think I got in around like $22 and then sold the option, or I sold the put for $21. And so since that point, the stock has just been continually falling. But I'm not that upset about it because one of the hardest parts about trading options, especially with a wheel strategy, is deciding what strike you want to be targeting. Because as we go to the options chain over here, oh, we're on the wrong G stock. Let's go to GME. So you have you just have so many different options. And so when the stock is currently sitting at, $17.50, you have do I want to sell it for the current price? And then if the stock goes up, it's going to be taken away from you. Do you want to sell it further out of the money, further up, where you're not going to be getting as much, but if the stock goes up, you can still take advantage of the upside potential. And so the reason that I decided to go down here to the 1850 and sell that is because I'm trying to get closer to the support that I've drawn. And so when I was looking at the stock the first time, the area that really stuck out to me was around this $16 mark. And so this is an area that's been respected from the top with a support here. It had some problems getting through here. Then we had a gap down, had some problems getting up here. And it's just been, the $16 mark has been the very interesting area for me. And so based off of the major drop in price we've seen, I was not able to get down to exactly that $16 mark, but that's going to be my short-term bottom is, the goal. And so as we're coming in here, we've been seeing a lot of red candles in a row, which is obviously not great, but until it falls below the $16 mark, I'm pretty comfortable right here. So this is a stock that, has been on an incredible tear in the past couple months. So I'm not that surprised to see the stock selling off a little bit. And so I have this for another 18 days. It is, let's see, 1850. Yeah, so it'd have to go up a full dollar. And since my average price is sitting at $18, I would be able to get, I'd make a $50 profit, which is not great. But considering that I bought into this stock, or I started my position when it was at $21, I'm pretty happy. And this is the benefit of selling covered calls and the wheel strategy is that even if the stock goes down, you can still profit from it. And depending on which options you're selling, you can still take advantage of upside moves. So yeah, that was my plan with GameStop. And that's the reason why I'm watching the $16 mark going down to maybe $15.70 as being a very interesting area to watch. So going back to my portfolio, I still have a lot of my accounts sitting in cash. And the reason behind this is I'm waiting for good opportunities to buy into new stocks. And the GameStop position isn't too large where it's going to stress me out because of the intraday moves. This is a stock that's down a lot today. And while it's definitely hurting my account, it's not something that I'm, anxious or stressed out about because I'm worried it's going to blow up my portfolio. I have a set amount of dollars that I expect to lose if things go, worst case scenario. And I'm totally okay with that. I think it's very important that a lot of people, when they take options positions, they're usually way too large. And just the intraday movement usually stresses a lot of people out. So I'm very happy that I took a smaller position on something like GameStop. And so with all this cash, I am going to be possibly missing out on some profits if the stock market continues to rise like we've been seeing the past couple months. But with that money on the side, I'm looking at 3 stocks that I want to add in January of 2021 if things go according to plan and we do see a decent pullback. The first stock that I'm going to be looking at is going to be Lemonade, ticker symbol LMND. I talked about this in my innovative stock video, and the whole idea that I like it is that it's a very different insurance company in an industry that's so kind of stale and doesn't focus as much on the technology side of things. And so it's very different than its competitors. It IPO'd in 2020, and I thought it was the best 2020 IPO overall. And after that IPO, the share lockup period ended, and as a result, the stock price dropped around 10% on that day, as a lot of people that were involved in that IPO sold their shares to lock in some profits after the incredible run that the stock had seen after it IPO'd. It is a Class B Corp, which I think is very interesting. There's not many publicly traded stocks you can buy that are one of these Class B Corps, so I think that's really exciting. The number 2 stock that I'm looking to buy is I'd like to buy more General Electric stock. I'll put in my portfolio breakdown as of right now. I do have GE stock right now, but I don't have as much as I would maybe hope. And so my goal for the end of January is to get up to a full lot. I'd like to get to 100 shares. The reason behind that is I'd like to sell long out of the money covered calls to try to bring in some additional cash flow. And my plan with that is this is not a stock that I think is going to shoot up 20% in a week or so. And so because of that, I'm comfortable selling out of the money calls because they're likely not going to be taken away from me, and I'm going to use that additional cash flow from selling the options to buy additional shares. And so this is a way to kind of leverage my position and add on to it while the stock just kind of does its own thing. I am very bullish on GE for the long term, and I've talked about it in a bunch of videos. But I'd like to get to a full lot so I can sell covered calls on my position. And then the number 3 company that I'm looking to buy has to do with maybe like a PayPal or a Square. I'd like to buy some more innovation going into my portfolio because, I'll put that breakdown up right now. I have some blue chip stocks with Nike, Apple, Microsoft, and then I have some of the reopening stocks when it comes to Southwest and Planet Fitness. But I don't have a lot of stocks that I'm very excited about for, a really long-term position. And something like a PayPal or a Square is just such an exciting industry to be a part of. And they've had incredible returns in 2020. I have owned PayPal in the past, and I'd like to get back into it sometime soon. So overall, the 3 stocks that I'm looking to buy in January of 2021, Lemonade, because I love the idea of it being a Class B Corp. Then General Electric, because I'd like to get up to a full lot so I can sell covered calls in my position. And then 3, I'd like to get some innovation back into my portfolio with something like a PayPal or a Square, just because I feel like my portfolio is a little boring at this point. It was very good in 2020 when I bought a lot of the reopening stocks, but we are in a new year and I need to change up my strategy going into this year because what worked last year is probably not going to work this year. So let me know what you guys thought of my overall portfolio. Let me know what stocks you guys are looking to buy going into January of 2021. Thanks for watching. Happy New Year, and I will see you in the next video.